Cool, we've got the sort of future, the fintechs. Can you just start off, why did you start Mercury? Actually, what is the founding story?
Yeah. Hi, everyone. I've been doing startups since 2006. So, I don't know how many years is that? I've lost count. 16, 17. And I was just always really frustrated with kind of the banking experience that I had. You know, in 2006, as an entrepreneur, everything sucked. Right? I remember, like, there was no Slack, there was no Stripe. Like, I did the thing that you did before Stripe existed, which is impossible. And then I had this idea for Mercury in 2013, and basically everything had improved apart from banking, and banking was the same, kind of, you know, not to be harsh to them, 100-year-old institutions that like have the same product, and you know, maybe they have a mobile app, but they're not like kind of this product-led. And you know, frankly, the expectations I had for like software and services were just way higher, and I didn't think the banks were going to build it.
How long did it take to have something that people could use from the start of the business?
Yeah, so I had this idea in 2013, and then I sold my previous company in 2016. And at the start of 2017, I was like, okay, you know, I think I know what to do on the product and, you know, how to get customers, but I had no idea how to kind of launch a bank account. So basically 2017, I kind of started, and, you know, at the same time I was having a kid and all this, so it wasn't like full time. And then, you know, figured out how to do it, and we decided to go kind of the route where we partner with existing banks. And it took us about a year and a half kind of from like starting building it to kind of doing bank partnership and getting everything live and launching in April 2019.
And how transformative or not was the SVB crisis for Mercury? Like on the one hand, I imagine it's like, oh, we need a new bank account. You're easy to open. On the other hand, you know, if people are running to JP Morgan, are they, you know, going to a startup for their banking, or how did that play out for you?
I thought it might be fun to do a little show of hands. I don't know how many entrepreneurs are there, but how many people use Mercury? All right. How many people from that used it because of March 2023 versus just before? So, yeah, everyone there already used Mercury. So I think, like, you know, we've been doing this since 2019, and we've been growing, you know, fairly consistently and fairly fast. We, you know, went from basically a 9-person kind of seed stage company to raised a Series A and then a Series B in 2021. And you know, 2023, especially March, it was definitely significant for us at the time. There was a, you know, big blip. We got about 8,700 kind of customers in a short
8,700. Did you say what a percent increase that was or anything like that?
So we've said it before. We have about 100,000 kind of customers, more than 100,000 customers live, something like that. So, you know, you can get the rough idea. So we were already, you know, fairly big at the time, but it was definitely like a significant bump. And obviously these customers were on the bigger side in general. What it has done for us is it's really kind of been an inflection point in terms of how fast we've been growing. So even since then, you know, we've been growing basically twice as fast as we were pre-SVB. So like January and February this year were our biggest, excluding that 1 month in March, were by far our biggest kind of months we've ever had. And I think it's really, when I think about product, I think about like amazing user experience and all these things. When, you know, when banks think about product, they mean like what kind of loan they can sell you, right? So it's like a very different mindset. And I think tech-enabled companies and entrepreneurs, like, you know, they're looking for a banking service that matches the rest of the expectations of the software they use.
All right, we've got a banking service, or like you go to your website, you know, banking, I think is the first word, but then you have this like, we are not a bank. We work with Choice Financial Group or whatever. I think people here are savvy enough to understand that probably, but the decision not to be a bank is a pretty core one. Why did you decide to be the software platform, work with banks, and not be a bank yourself?
I think in general, you know, people want to feel like their money's safe, and people want a great product. And they don't care too much if like Mercury is a bank or not. And actually, I think we can provide a much safer product by not being a bank. So by default, anyone that signs up to Mercury gets a sweep account, and we sweep it to kind of 20 banks underneath the hood. So it's 5
some of the
million.
Traditional banks like will have sweep, but it's not default. Is that sort of the tension?
Yeah, I mean, yes, you have to jump through a lot of hoops to get these kinds of things at banks. Yes, it's possible, like they call it ICS, but it's not easy. And then, you know, we also have kind of US government T-bill product called Mercury Treasury that makes it very easy to put your money together. And that's something we launched over the weekend when this SVB crisis happened, we launched something called Mercury Vault, which helps you understand where your money is. And we also extended FDIC insurance from 1 million to kind of 3 and then 5. So overall, I think it matters a lot more to be kind of a chartered bank if you are doing lending. I think there's not that many fintechs that have pulled on like at-scale lending without being a bank. But in terms of providing depository services, payments, kind of all the software that you need to run your business, I don't think you need to be a bank.
Are you going to reevaluate the decision?
I mean, we look at it every year. Yeah, in the UK, actually, most of the neobanks became banks because the UK has like some kind of fintech-friendly charters. So does Germany and Brazil. So yeah, the US hasn't done that.
Are you in the UK?
No.
So that's your way of saying, oh, if we wanted to go to the UK, we would have to become a bank?
No, I mean, there's also other ways, and you can partner there as well. I'm just from the UK, so I was thinking, I always think about the UK. And like that was actually part of Mercury's inspiration. Like there's a lot more, now actually the US has caught up to some extent, but in 2017, there was a ton more innovation in kind of new banking in Europe.
What are the main ways right now that Mercury generates revenue?
Yeah. So we have 5 or so revenue streams. We have a lot of deposits, and we have a very deposit-rich kind of customer base. So we make money both on our treasury part. We have kind of fees on it.
And the treasury is like you run that.
Yeah.
And the deposits, the bank runs it and pays you some money.
Yes, exactly. Yeah. So those are 2, and then we have both credit cards and debit cards, and we get interchange on those, and we also have FX. And we also have a venture debt lending book. We get fees, so we work with the bank on that, and we get fees from that as well.
You're just like a funnel to them, basically?
Well, we do all the servicing, origination, but they do the balance sheet part.
And would you want to do lending yourself?
Well, we're not a bank, so we can't do it using our deposits, so we always have like some balance sheet provider for it, but yeah, we're growing the lending book as well. Venture debt is our current kind of product there, but we're kind of experimenting with others.
I mean, a big theme of the day has been what's the state of relationship banking, right? I mean, we've got like several banks that are basically Stifel or Citizens or whatever that are premised on, you liked us at this bank, you'll love us at this bank, So that's a belief in relationship banking. I think Matt's presentation was very sort of skeptical of that model. If people are able to use like generative AI models to price shop and sort of that inertia goes away and people are much more conscious of getting the best deal. You're sort of focused on product. What do you think of relationships when it comes to banking?
Yeah, I mean, my experience with relationship banking was I need to send a wire and I literally cannot figure out how to do it. Please help me. Which to me never felt like a relationship. It felt very transactional and painful. And with Mercury, you don't have to do that. I think there is an element of okay, things are getting complicated. I'm considering loan options and things like that. And I think for those relationships matter a little bit more. I would say, ideally, there is a product that can answer your questions, right? If you take lending, ideally, it's hey, we already have your banking data, and here's a generated loan that you just click on to accept, right? I think that would be the better customer experience. But we have relationship managers now, and we do that as well. But yeah, I don't think that's the future. I think the future is a product-based approach to banking, and I think frankly that's kind of what people want. There's definitely elements where you want to make sure there's someone there, and sometimes that human can really help you. But maybe the AI can answer all your questions.
Sure, okay, right? So I was going to ask about AI, generative AI.
Yeah,
I'm sure you're experimenting with it. Where do you think it might be useful to your business?
Yeah, I mean, I think the first part of Matt's presentation on the Gen AI thing is hey, increases efficiency. I think there's definitely elements of that, and we're already experimenting. When it comes to fraud and things like that, there's always been machine learning anyway, and there's other. I don't know if Gen AI plays a big piece there, but customer service, understanding, even something like receipts, it's way better to OCR them using kind of these modern techniques. So there's lots of these kind of efficiency things to be had, and that's where our focus has been.
On the regulatory front, I mean, there's clearly been some push for fintech companies to have a tighter relationship with the underlying banks, or how would you characterize sort of the pressure and feedback that you're getting in terms of your banking partners and how much they want them to be involved with your business?
On a high level, 2021 saw a ton of innovation. Like a lot of fintechs launched, but actually a lot of new partner banks came along that like previously were not partnering with fintechs that started partnering with it. So, and then when there was the crypto crisis of 2022, where there was a lot of companies that kind of had issues, and then obviously the SVB thing. The regulators...
You're saying those were red flags. It's like crypto,
yeah,
SVB,
I think like,
bubble, fintech.
From a regulatory perspective, it's like, hey, we need to check out what's happening in Silicon Valley, right? And that's fair. We've always kind of operated on like, we do business banking. Like we're not doing any weird crypto thing, right? Like, I mean, I like crypto, but...
No crypto for Mercury.
Well, we're not doing any crypto products. But we've always done like fairly vanilla products, but just from a regulatory perspective, but obviously packaged in a really nice way. And we've always felt that compliance and risk is like a very important thing for us to get right, and we've always invested heavily in it. So I think the current regulatory scrutiny and both fintechs and these banks having to kind of look at what they're doing and go, hey, are we doing this in like a fully compliant way? I think it's healthy, and we're going to come out of this with, there'll probably be less fintechs and there'll probably be less kind of banks that work with fintechs, but the ones that come out on the other side will be in a kind of much healthier position and with like, products that hopefully are in a position where they can scale.
How does it translate on just cost? Or, are you just having to do more work telling your banking partners about customers, or is it having, does it change sort of the cost structure of your business?
Yeah, I don't think it changes the unit economics and costs significantly. I think it's, you can still, and like, businesses like Mercury will always have like a lot more kind of automation, and even when we have people, we can give them a lot of leverage with the tools we build. So we have our own risk product team, and we build, we still use third parties, but a lot of our tools are built internally, so we can like do things really fast and with a lot of information. So overall, I don't think it changes the risk, like it doesn't change the unit economics. What we try to really be careful about is, how does it change the user experience? And actually, one of the things to think about is like a lot of the time when people complain about their banking or financial services experience, what they're really complaining about is like, my account froze, or I couldn't get this thing done, or it was slow to do this. And those are all like actually like compliance and risk friction. So how do we do that in a way that actually like some of the friction is necessary, but I don't think it's all necessary, right? Like if you've already collected a document on the user, like let's make sure that we don't have to ask them again, right? Or like preemptively, if we know something's going to come up, let's try to be ahead of it. So that's the kind of thing we think about a lot.
You work with 2 banks right now, right?
Well, it's complicated, but we have 2 main partner banks, but we also have kind of 2 providers on the international payment side. And we also, with Mercury Treasury, we work with Apex as our custodian.
Is that a good equilibrium, or is there sort of an ideal, one bank, mini banks, or how do you think about why have 2? Or
I think 2 is a good number. Maybe 3 is slightly better, but I think 1 is bad because you need redundancy, and I think it's, as a fintech, it's responsible to have like multiple partners that you can work with. I think if you have more than 3, it's just going to be a lot of work to follow all the rules and make sure everyone is like fully abreast on things. So I think 2 is a good number. For us, it's we have a really strong and deep relationship with both of the partner banks. So we talk directly with them both in terms of the technology side and the kind of compliance counterparts and things like that. So and it's important for us to go really deep there.
We heard, I think, on the Rippling panel, this idea, okay, where you really need to dig deep with partner banks, especially if you're like a big company. I've been hitting on this theme, but like, Mercury is the brand, but then it sort of leads your customer not to do or think about the underlying banks, or how much, I guess when you're dealing with bigger customers, are you spending more time educating them on the banks behind Mercury?
So I think Matt Harris said this, and I completely agree that I don't think our customers should be checking the balance sheet of him. I mean, also, like, did you see his graphs? Like, who here even, and we're banking experts, as like, qualified to look at all this data to make an assessment on their bank, and like, were people looking at SVB data and going like, oh, this might have a bank run? So I don't think that's realistic. I mean, I think it's much better to go like, hey, we have 5 million in FDIC insurance, and anything above that you can put into US government T-bills. Like, that is something where we can help our customers understand how that works, and we have a lot of information, and we have this product called Vault where we explain it. I feel like that's the answer. I don't think the answer is everyone's going to become bank experts. I'm
going to open it up to questions soon. How has it been living through the fintech hype cycle, or where are we right now? What's your read on the mood in terms of venture capital and fintech companies like your own?
Yeah, I mean, 2021, serious hype cycle. I've been in the Valley since 2007, so I'm like a little immune to these things. But, I much prefer building a company outside a hype cycle. It's easier to hire people, and, you get less competition. Like, there was a while where everyone was like, every single product is going to have a bank account attached to it. And I was skeptical, but, obviously as a startup, I'm like, well, maybe every single company is going to compete against us or something. But I think it's healthier, and overall, like, I just looked this up because I was like, what percentage of GDP is financial services? So it's 8.3% according to a quick Google I did earlier. So that's huge, right? And I think the trends that are underlying it, everyone's interacting with things on their phone. Generative AI trend that Matt talked about, like, it's inevitable that most people will relate to financial services via tech products. Some of that's going to be from existing banks, but I think a lot of it is going to be from fintech. So I think these trends are going to go on for a long time. I'm happier to do it outside a hype cycle, though.
Any questions?
The question was, where does BaaS 2.0 go? I think, there's this movement. There was a moment in time where a lot of banks wanted to work with fintechs, but they couldn't do it easily. And, BaaS kind of sprang up as like the middleman in the space. I think the next set of things is banks either themselves or working with technology providers to have BaaS internally. And that's basically what we're saying. So, Column and Lead are these two kind of BaaS banks where, we have Silicon Valley people go buy a bank and then apply technology to it. The two banks we work with, Choice and Evolve, have built all of the tech internally to work with us and to work with other fintechs. I really think that's the future. And not just from a regulatory perspective, it's also just like, if you can remove the middleman and there's one less person taking margins, like, it's just kind of an inevitability. So that's where I see it going, and I think that's, like, if we go 3 years from now, I would think most banks will be working directly with fintechs, especially at scale. I think the bit that the middlemen do really help with is when you're first starting out. When Mercury launched, there was only 9 of us at Mercury, and that would have been quite hard to get like a direct bank partnership done and be able to service that fully.
Lead's next. Like, have you thought about working with them, or Lead or Column, or
Yeah, we don't work with them currently, but I'm a huge fan of Jackie. Where is she? Hi, Jackie. And William over at Column, so I'm sure we will at some point. Yeah, I guess depends why you're looking for diversification. I think the way the sweep network works and, our Mercury Treasury, like, at least in terms of like putting your money somewhere safe, I think that we've got that covered. And Mercury's been profitable for the last 6, I guess almost 7 quarters. So, we feel like we're in a very stable place and we think about the long term. So I would say you'll be happy with Mercury.
So just one bank?
Sure. I mean, we're not one bank. We're a platform. Sure. We're not a bank at all, actually.
If you were to start a fintech company today, besides your own, is there an area you're excited about, or where would you?
Honestly, I'm pretty excited about these Gen AI agents. Someone's going to have to make those. I actually invested in a company building like fintech Gen AI agents. I think those look really cool.
What do they do?
Well, they're not live, so I won't say exactly what they do, but it's this exact thing. It's like, hey, if you want to buy car insurance or mortgage, like, who wants to click those buttons, like, have it automated, find me the best one, swap it out whenever something cheaper comes, it's like that kind of thing.
My final question, it's sort of this same take stock question I've been asking. Like, as a founder, watching like an institution like Silicon Valley Bank unravel, like, did you do anything differently afterwards, or how did it change your perspective as a CEO?
I mean, for us, it was a weird moment, right? Because they were the 800-pound gorilla competitor for us, right? Like when we launched, people would say like, oh yeah, why would I not use SVB instead of Mercury? Like it was always a thing. And then, post March, like, I don't know if we've been fully reversed, but it feels like a very different world, right? Like now, when I talk to customers, it's, I'm sorry, Mark from SVB, but when I talk to customers, it's mostly like, should I use JPMC or should I use Mercury? Like those are the conversations now. So like the paradigm has shifted quite a bit. And yeah, I was really sad about it. Like I used SVB in my previous company, and I think even though we were competing against them, like I never thought badly of them. I think they're like great people. So yeah, it was a sad moment. It also gave us this opportunity to grow faster.
Great. Immad, thank you very much.
Yeah, thanks for having me.
Silicon Valley. Welcome